welcome everyone to the very first Traders Roundtable. My name's Jitan Solanki, and I am going to be the host of this battle today. Hopefully, knowing these two trading titans here in the room, and we are joined with Jens Klatt and also Markus Gabel to share their insights into the financial markets, two phenomenal traders. And today we're going to be covering quite a few different things, actually. And one of the things that we're going to be covering is just a state of the financial markets right now. And this, not only just the state of the financial markets, some key trading opportunities that I know both Markus and Jens are looking at this current point in time. So first of all, guys, how you guys all feeling? You're both in Germany, right?
Yes, we do.
And how's life over there right now during this whole situation?
Jens, you're the older one. No, you're the younger one.
Yeah, but I'm looking older because my hair, But this is because I was already at the barbershop, Markus. Yes?
Okay, but now I have another one. Look at this one. I have cool glasses. Look at this one. Yeah.
Okay,
cool.
so the sun is shining in the southern part of Germany.
Yeah. No, you're so beautiful, you know?
So the thing is, here in Germany, so yesterday we started to lift the lockdown already, so a bit, let's say. I think the special part, or the special thing is that every part in Germany, every state is doing it completely differently. For example, gyms here in Berlin are still closed and won't open, but they will open somehow in Bavaria. That's what I at least read, and that's why I'm a little jealous, to be honest.
Not really. They're fighting for that.
Okay, then everything's fine. So we are still in the same. We're sitting in the same boat. That's okay. Well, fine.
Yeah, okay. I think it's quite interesting, isn't it? A lot of governments now, we saw the financial markets rocked I guess only a few weeks ago, really, but a month ago, we saw the financial markets rocked with the whole coronavirus situation. We've seen a very impressive relief rally. We have to call it a relief rally, at least at this point in time. And, now we're starting to get governments lifting up measures for the lockdown. So I think it's going to be quite an interesting time for traders. And I think one of the key markets that I just wanted to focus on today and get your opinion on, guys, and Jens, we'll start with you here. And I'm just going to show a chart off the S&P right now.
You probably should start instead have a look at the Nasdaq. I just saw it on
that's the easier one, right?
Well, this is no joke. The Nasdaq just pushed into positive territory for 2020. So no joke about it.
That's absolutely crazy. That's completely crazy.
But it's to be honest, I'm really happy, and it's somehow it's a coincidence. But it reminds me, to be honest, in a great extent to what had happened in 2008 in March with Bear Stearns, when Bear Stearns went down. So I'm not sure whether you recall it, but I was starting to trade on my own around one and a half year before. So I started already trading professionally as an institutional, as a market maker for a big stockbroker here in Germany. But my first private account was opened shortly before the big volatility hit in 2007. So I somehow started trading right at the start of the big, great financial crisis. I remember that time really well, because that was the time when really volatility shot through the roof, even though compared to what happened last month was still quite low. But what I remember was that everyone back then, me too, by the way, was thinking now the world is over, game over, and thanks for playing, and let's see, let's start back somewhere in the Stone Age or something. And the year already started very roughly in January 2008. It was with Jerome Kerviel. You probably heard about this rock trader for SocGen. He was building a position of billions in the DAX back then. And when he was caught, the risk managers just delivered his whole position to the market, which resulted in a massive sell-off, especially in the DAX in January. So that was already high turbulences in markets. And then we recovered a little, and then bear went down. That was in March. And everyone was about to say, well, that's it. And the interesting thing was that after these massive losses and bear was taken over by JP Morgan, within 2 months, the S&P nearly made back all of the losses which it had acquired from the start of January 2008. And to be honest, I think that this is exact the same thing what we get to see right now. So I'm not buying this this rally at all, even though it looks so brutal. And it's, I mean, to be honest, we are talking about over 30%, and still, it's. I think we have to be really careful not to underlie this classic. How can we call this? Yeah, FOMO. It's fear of missing out. But I think there will definitely be a next leg lower because now we're not talking only about the banking sector and some kind of speculative access, let's call it, but we're talking about a real economy problem, a big issue, and you can't print demand. That's just not possible. And I think this is what we will definitely learn the hard way now. Also, when I look at the streets here in Berlin, probably, well, we are a little, let's say, alternative. That's probably a fair way to put it. Markus is the more, let's call it, conservative guy in Bavaria, let's say.
Bavaria.
Yeah. So to be honest, I have the feeling that I'm probably more Bavarian than Berlin or Berlinian or something. But still, when you look out on the streets, you definitely see so many people right now behaving as if everything is fine and in place again. There will be a second wave, and when this second wave hits, then I think there will be plenty of bankruptcies, and we will see some heavy turbulences in markets again. Well, this not necessarily will affect U.S. equity markets, but probably the hit there will even be worse due to the fact that I have the feeling they are, the management of this company USA right now is probably not that competent as it should be or as it needs to be. Yes, it's put that.
We'll see if there's going to be a management change in November with the presidential election. But I think it's interesting, right? I mean, I think we've spoken before actually, and I know both you, Markus as well, have been buying into this rally just very slowly. Obviously, right now we're seeing a bit of a divergence, a very small divergence between obviously technology shares, which are obviously doing quite well during this sort of coronavirus lockdown. But we're seeing the S&P just struggle a bit, hasn't quite got up to the highs of the year so far. Obviously, the Dow as well struggling a bit. I mean, European markets just look ugly. They haven't really enjoyed as much of the relief rally that we've seen so far. And I know both of you have been looking for or calling for the market to maybe test some of these low points, and I see that happen a lot. But would the US market be your sort of stock index of choice, or will you be looking for weaker stock markets, maybe the DAX or the UK 100 or something like that? I mean, what's your take on that? Is because actually the US market has actually done very well, hasn't it, relative to some of the European markets? And Markus, I mean, how would you be playing the stock indices right now? Will you focus on US primarily, European primarily?
Yeah, I have a similar opinion like Jens, because I think you cannot compare it to situations between 2008 and now 2020, because in 2008, 2009, the crisis hits one industry, and it was the financial industry. Yes, okay, as we have a lot of unemployment at that time, but 2020 is completely different. This is the first time that a virus hits the whole world, and it isn't finished right now. And I guess most of the people don't recognize what's really happening in the world right now. So we have rising cases in Russia. We cannot talk about Africa in that moment. So we only focused on Germany or maybe USA, but look at your own country, like in England. So rising cases every day, more death every day. So it isn't finished right now. So, and this, the rising markets right now is not, in my opinion, it's not healthy. It's completely crazy. So it's only built on that money the central banks pushed into the market, because money must be invested anywhere. So, and the big money must invest the money in, how should I say, in shares. What else? What else?
I should buy gold.
Yeah, okay. You know, the gold price, the gold is, there's no liquidity in the market. So have a look at the COT report. So there is no changing since month in the gold price. Can you see that in the COT report? So if you have a look at the COT, in the COT data, you can see the price is so much overbought in gold price, but nothing changed. And in maybe in oil as well. So
I mean, sticking to the gold price, and we'll come back actually to stock markets right now, because gold has been talked about quite a bit. There's been a massive divergence, hasn't there, between the price of physical gold and actually the price of paper gold. And speaking of gold, we've got the gold master here in the room finally, and now it's
the
equal.
golden boy joined us.
We've got 2 people from Germany and we've got 2 people from the UK, so I don't feel outnumbered. So thank you for joining us, Paul, here.
My apologies, guys. My apologies. I've had a bit of an emergency to deal with, but yeah, I apologise for that. But yeah, great to be here. Nice to see you all.
Good stuff. So we're just talking about gold at stock markets and gold. And that kind of correlation. And I think one thing that a lot of people have been speaking about, you know, we've had that rally higher in stock markets, okay, because of central bank action. But a lot of people are saying, well, you know, this is not 2008, so, you know, it's not necessarily the same answers to solve the problem. But I think gold is going to be an interesting market. And I think, Paul, we were talking about this, I think a good few weeks ago, actually, with gold. And we've seen a decoupling in the price of physical gold and actually paper gold, right? Because of the 3 gold Swiss mines that had been closed down, and physical gold not being able to get into London vaults and things like that. And we've actually seen some very choppy price action. You know, many of you who are trading gold, you would have seen spreads widen on, you know, on different platforms because of that situation.
By the way, Jitan, one question. Can I share my screen? Because I just opened in the background the COT Markus was referring to on a website here, on a research website. So
yeah, perfect. Go for it.
Yeah.
And by the way, guys, if you have any questions behind the scenes, just let me know in the Q&A box, and I'll be more than happy to answer those at the right time.
By the way, in regards to what Markus said, I think this is also something which perfectly illustrates what I just said. You can't print demand. The same is true for you can't print supply in terms of gold, by the way, physical gold. So I think what people completely lost over the last decade, over the last 10 years was that this paper market they were trading, there was a real market behind this. I think they became aware of that first when oil turned negative 3 weeks ago, something. And now in gold, it's the same thing, only the other way around, right? And so what people, I think, not realize, at least not retail traders, but professionals and institutionals, is if they hold a contract beyond the expiration date, then you have the right to get the amount of gold delivered. Respectively, if you're short the contract, you have to deliver. And I think this is why here there is now not so much action taking place, because yeah, to speak in a picture, no one wants to have the hot potato at the end of the day. And I think this is something which also shows how, to some extent, dysfunctional the markets are, or how decoupled the real world became from the paper world. And I think it's also something we can see now in equities. It's the perfect thing. The only thing is, I don't think that this is sustainable, even though we shouldn't underestimate the willingness, especially from the Trump administration, to manipulate the stock markets higher, at least till the election, and to at least have something to show. I mean, today, I think they added another 3 million in initial jobless claims. So he can't really claim that he's so successful in regards to bringing people into work or have the greatest economy ever. I think the second quarter will something print like minus 20, 25% or something. Yesterday, ADP data came in at minus 20 million, erasing a decade of created jobs in the private sector. So this is nothing he can sell, but a stock market which raises to new highs. And well, it makes the rich richer, yes, but at least it makes someone richer. And so he can sell something and then say, hey, look at this, and I'm the right for bring you a prosperous future and guide you through this crisis which lies ahead of us.
I think the question on everyone's mind right now, there's some really good questions coming in through here, and we're just gonna go through each one of you guys actually. So just looking at the chart of gold, right, the fundamental backdrop seems to make sense for a further push higher in gold. So, and again, you've got the COT report here, obviously, showing the fact that actually the gold demand has waned off a little bit, right? We know Russia, the central bank, a Russian central bank, I mean, they've been buying up gold every single month for the past 3 years, and they just stopped actually I think last month it was. And we've just seen gold prices actually push sideways. So, I mean, we'll start off with you, Jens. I mean, are you buying gold right now? And if so, is a $1 million question, isn't it? Are you buying gold right now? And if so, what sort of how long are you going to hold on to this, or are you waiting for better levels? And don't worry, Markus and Paul, I'm going to ask you the same question as well. So.
So will there be better levels? This, I think, if you want to hedge, I think now is the best time, because you won't get the perfect price, and especially what happened over the last 2 months, I think has perfectly illustrated. If you hadn't had a hedge, if you were in position, and just finally thought, oh, it's probably not such a bad idea to now buy some physical gold and have some gold bars at home or something, well, yeah, try to find someone who's selling them to you. Every store is closed, so it was probably has been a good idea to buy it already before. Now, to be honest, I have thought about this very heavily for the last weeks, whether to buy gold or not, especially after what happened in oil, and I know that at the website from Admiral Markets, there is a research piece on the question whether there's a chance that gold can push to 10,000 USD. It's a very, very heavy headline for an article. Still, given the supply issue, let's say, it's a realistic option. But now the thing is that I started to think about this a while, and I wondered, well, is this really realistic, especially when looking at a gold contract which has a continuous price with no expiration, which is now the thing why probably also WTI prices start to stabilize. So what they do is they start to price in contracts which expire somewhere at the end of the year, and the main reason why negative oil prices became an option last month for the May contract was because it was only the May contract which was affected by that. In case of gold, I think it's not that easy to get such a May contract when talking about CFDs. So this is something where I'm a little skeptical, even though I have to say I'm very skeptical for the US dollar mid to long term. I think probably the US dollar will be abandoned as the world reserve currency. So to be honest, we're looking at the developments, especially now between Russia, China, and the US. Russia in regards to oil, China in regards to the coronavirus, and the US and the harsh rhetoric which is there. I have to say, somehow I see also some kind of attack on the US dollar. And usually a good US dollar short hedge is gold long. So from this perspective, I'm definitely a buyer of gold, even though I definitely don't want to say whether this is currently a good level, or probably we get another leg down, a next liquidation wave, which would probably also push gold lower, and you can probably also buy 200, 300 USD lower then.
Okay. And what about Paul? I mean, we were talking about gold a while back. I mean, what's your sort of take on that right now?
I look at it as kind of two versions of Paul, just to muddy the waters, kind of investor Paul and trader Paul. Investor Paul, I've had gold in my SIP for some time now, and added to it last year. And what I look at now, if you look at like the monthly chart, if you've got that there, if you'd be kind enough to bring that up. If you look at there on the monthly chart, that monthly close on gold was kind of the highest closing gold we've had for about 8 years, and you're sort of back in 2012 that we saw that as a monthly close. So we've had for the last 9 months or so, we've had like kind of good moves if you're looking at kind of longer term appreciation, as in like an investor gold. So I have gold in my SIP. So in the UK, that's my own self-invested pension, and I'm very happy with that. I know Jens said, the commentary about, could gold go to $10,000? Personally, I'm always, when you see big numbers like that bounded about, I personally, I kind of always shrug it off a bit myself. It's a case of, I just have to deal with what I can see at the moment. And what I see at the moment is that, gold has been, as you can see there on the monthly, it's been in a nice uptrend. There's been opportunities to buy it as an investor, to basically sit and hold. But then when I switch to sort of trader Paul and look at, say, the daily chart, well, there I'm looking at, I'm kind of curious at where price is holding at the moment. I'm just looking at that, the price action on the daily, trying to understand and work out, is that a double top I'm seeing there at the moment? Is that a kind of a triangle that's forming that's going to be a continuation pattern, or is it a case of there's a bit of manipulation going on there at the end of this, what has been a messy couple of months for the gold price itself? And a little bit like Jens, as a trader, I'd be tempted to maybe see a little bit of a leg down before it continued its move north. Yeah, so as I said, I'm kind of investor Paul look a little bit differently than trader Paul does, if that makes sense to people.
Well, I think it's an interesting one, isn't it? Because we're looking at markets where, they're suitable not just for trading opportunities, but a lot of people will be looking at investing opportunities as well, looking for that longer term move. And of course, we're pretty high right now relative to where we started just in March. Believe it or not, not that long ago, actually.
Can I ask a question? Probably some of you guys can answer, because I have it at least not yet on my agenda. When looking at gold, I think it also makes, especially when Paul talks about investments, to look at ETFs, right? And I think GDX, the gold mining index, made a quite nice move, especially after it was really sold out here in these 2 weeks in March. Does it meet the developments we see here in gold? Do you know this, or is it probably a bit behind or ahead of gold here? So do you have probably some kind of indication there? Do you know this? Do you have it on the agenda?
I wouldn't be able to sort of give you great insight on that ETF GDX and such. But if you look at the ETFs that are offered, which might be a little bit outside the remit of what we're talking about today, there are opportunities to basically, as I say, to take kind of longer term positions in gold, and also in gold miners and producers. But for today, I'd be just saying, in terms of, most of those things are matching the gold price, whether we're looking at here like a continuous contract, or whether you're looking at particular futures. Gold, despite a messy run, has actually had a great last few weeks.
Yeah, and I think a lot of people do need to be careful with some of those ETFs, because the way they're structured is not always what people think it is, right?
Why do I know that you're thinking about Yuzo?
But in terms of gold, so just some interesting questions here. I'm going to go over to you, Markus, actually. So, there's a case for gold to push higher if indices push lower. And in regards to indices right now, what would you be looking for? Whether it's, I'll just show a chart of the S&P. But in this situation, in terms of, I know you're very rule-based in terms of the way you trade and strategies. what's your take on the S&P right now, or any other European index, and how would you be approaching it?
To be honest, I'm waiting for a short entry, because it's too high, and this increase isn't healthy enough. It's completely unstable, because we have a death economy around the world. So I don't know what should happen next. So first of all, you only can make money on the markets on two ways. The first option is you have so much money that you can make your market by yourself. In that case, you don't need a chart. If you don't have that money on your account, you have to work with a strategy. So, and for example, if you watch gold, then I have this similar opinion like Paul. You have to switch between if you want to invest or if you want to trade. So if you're an investor, you have a completely different view of the market. So then you have a long-term view at the market like gold. You can buy gold and can give it to your kids and your grandkids and something else. But if you are a trader, you must have a different opinion and a different view to the market. So, and the same is in S&P 500. So actually I only trade in 4-hourly chart because I'm a trader. I want to make money every week and every month. I don't have any kind of opinion about the market. I only have a look at two things on the right side of the chart. So this is the $1 million question. Who knows what will happen next on the right chart in the next minute? Nobody knows. Nobody knows. That's the point. So you only have one chance. You can work with strategies, maybe indicators or something else. So actually, and I work with the price. So actually you can see the fair price, but the fair price is at around about, let's see my own chart here in S&P 500, just a sec. ES, the fair price in 4-hourly chart is placed at the future contract at 3,002 points, actually. So I expect the price will go up to 3,000 points, and then we will see the next down move. So of course, this increase, what you can see here, this uptrend is just only built on that on the Federal Reserve, the money that all central banks push into the market. And this is not healthy. It's not based on a stable economy. The economy is down. We are deaf around the world. So, and we are in a damn deep recession right now. So who is the proof? Who is the explanation of this big uptrend right now? So, and therefore I expect that we will see very soon the next downtrend. Just only my private opinion, because we are on the right side of the chart and nobody knows what will happen next. So work with the strategy and work with the price. This is my private opinion. It's the same like gold or like in oil. And we will never have a better chance in the future. I guess we are really lucky guys. We are the luckiest guys ever, because we made this experience to explain to all customers, to all clients, to all traders. Look at oil, for example. This is the best proof how the market works. No demand, the price goes zero. You will never have a better chance.
It goes minus 35.
Minus 35.
No, minus 40, in fact, when you look at the lows.
With one contract on 40, minus $40. This is how every kind of market works.
Did you know that if you had a long position, you had the right to get 1,000 barrels?
Yes.
My swinging pool does not cover 1,000 barrels, but probably for the next move to these levels, probably it's worth that we somehow we have to found a trading community, so that we then deliver to these 1,000 to ourselves, just to make sure that we have something.
Yeah, I think for a lot of people actually, just there's a lot of beginner traders in here and thinking, okay, how can oil even be trading? How can something be trading below zero? And it's just literally the case where there's so much oil around that's not being used that there's just nowhere to store it. So these oil companies are pretty much paying other people to store the oil for them. It's like, look, just take it off our hands, right? Because they don't want to shut down their wells because it's just too expensive to shut down an oil well and kind of restart it. So they still want to keep oil flowing. They can't just turn off the well. So it's almost like, where do we store it all, right? We've seen storage rates go through the roof and things like that. And I think oil's an interesting one. By
the way, when you say beginners, Jitan, I think this is very important to note. It's not oil. It's oil, yes, but it's Western Texas Intermediate. So it's WTI. This won't happen in Brent because they will just stop shipping Brent. It's another way to deliver oil.
Yeah. So the West Texas Intermediate, it's stored in the Cushing oil field, which is really in the middle. It's in the middle of land. So the problem is it can't go anywhere because no one was allowed to drive, the whole lockdown, and it's just not getting to where it needs to be. So yeah, and I think actually, Jens, we did talk a while back about you had a very good, interesting hedge play, didn't you, on WTI and Brent, and actually Brent oil.
Oh yes, and I really well.
One of those worked out well, so.
Yeah, but only one.
The hedge.
Well, the thing is, and this is the problem. WTI already traded with a discount to Brent, and the idea behind this pair trade was that you say these are fungible goods. That means that if one trades with a massive discount to the other, in this case WTI, rather sooner or later WTI should catch up and trade back to the normal levels, or Brent should catch up on the downside. The only problem with this trade is that if you didn't manage the risk well, it completely went bust. Because what here happened, the trade works out, needs functionality in market, so that there is no such problem as we have seen, so that there's really no demand for WTI anymore. Because now the thing is that the price for WTI nearly collapsed, and the spread between the two just widened any further till the moment when you got then the margin call. So, and this is also one potential trigger for the equity sell-off then in other why the equity sell-off triggered margin calls, for example, in gold, because there was a saying that traders in gold had to liquidate their positions to meet the margin calls they got based on their equity positions. So,
but how you can make money, Jens, with that? What you're talking about? How you can make money with that information?
Sorry,
how you can make money with that as a trader? So you are talking a lot of things, but
yes,
tell me, how can we make money with that information? That's the $1 million question.
Oh, well, you answered it already. So you need a strategy. That was what I was talking about. The pair trade strategy.
What kind of strategy you would?
Yeah, the strategy. The strategy is very simple. You have WTI, you have Brent, and then you look at the closing price of these two assets, and what you do then, you have a difference, and then you create an exponential moving average on these closing prices. And then you create a ratio. You divide one price by the other. And then you say, once the price triggers back above this EMA, you close the trade. And once it extends to and beyond a certain threshold, this is where the price is entered. So this is before the trade is entered. And then once it crosses back, you close the position again. So this is the strategy we were talking about. You have to have.
Science.
Sorry?
That's rocket science.
This is pure quant trading, no question about that. But it's a strategy. So
that's a rocket
science. I've spoken to you two before, and you've got different styles in trading. I know Jens is very quant based and has a mechanical.
Yeah. By the way, I was a little distracted when Markus said that he is currently expecting gold to go down. I bought 10 ounces. I think.
A contraindicator.
No.
It's always good to have one of those in the group, isn't it? But I mean, right now with oil, I mean, personally, I was trading oil at the beginning of the year when we had the whole You know, the missile airstrikes all going on in the Middle East and stuff. I mean, it feels like years ago now, obviously, but I mean, that was only at the beginning of the year, and
it was already highly volatile, right? So we
Yeah.
were talking about something like 20% in market movements or something like back then. And
I think that was an interesting place to, I mean, trade oil. I mean, for me personally, I mean, I've got a lot of questions here about, oh, you know, oil, you know, what are you doing with that? I mean, I have to be honest, I'm not really doing anything with oil all the way down here. I mean, this market has just collapsed like a stone. I think with oil, and correct me if I'm wrong here, it's always open to, you know, some kind of intervention, isn't it? From OPEC, from governments, from where it's trading right now. I mean, are any of you guys right now actually even trading the oil price at these, where we are right now, at these levels?
Certainly for me, no. I was watching Brent when it was tickling $20 and stuff. I was kind of curious there to see whether that would break or hold. But that was about it. I wouldn't consider myself an oil specialist or an oil trader. But if I see particular ideas or patterns coming through, you know, I'd be interested. If you want to see how messy oil is at the moment for new traders, well then, you know, they can take a look at the CAD yen chart. CAD yen has always been used as a proxy for oil, and if you look at that over the last month, you'll see that that's a very messy chart, and that will give you a reflection of really why I'm not really interested in oil at the moment. The easy money's been made there. Now you're fighting over the scraps, I think.
Yeah, but again, and that's where, you know, that's where the professionals obviously eat up a lot of the retail traders, right? Because almost like it's been going on for so long. It's not probably the market to focus on. I think actually in regards to the Canadian dollar, there's been some actually interesting things there. And I know I've got a chart here of the US dollar against the Canadian dollar. We've already seen some, I mean,
by the way, this is a very good proxy for the VIX, by the way, for the volatility index. It's also very interesting. That
US dollar against the Canadian.
Yeah. So if you're interested in volatility, there was a question, I think, somewhere in the chat box.
A couple of people have been asking whether instead of, so gold is always primarily been used as a hedge for, you know, a fall in the stock market. Okay, again, those correlations, it's just 101. It doesn't always work out, and right now correlations are out of whack because there's just too many other, you know, things happening that are just basically historic. I don't really trade the VIX a lot, the volatility index. For those of you who don't know what the VIX is, it's just basically an index based on the put and call options that are being traded on the S&P 500. So as the VIX index goes up, it heightens. It basically saying there's a lot of volatility in the market. As it goes down, it lessens. I mean, Jens, I mean, with the VIX, do you look at that quite often? Or is that something you'd use as a hedge? It's not something that I trade personally.
Well, no, so I'm not real actively trading is too much. So when I'm looking at options, for example, I think volatility plays a very important role, and there sometimes I also give the VIX a look, and but I wouldn't call it I traded. It's like if there's some interesting moves, or if there's some kind of sentiment extremes building. For example, I remember very well at the beginning of 2018, there was a historic sentiment short extreme in the VIX, and it was only a question of time once there will be potentially a bigger move, which then triggers a cascade of potential squeezes, or a cascade of a short squeeze, let's put it that way. And that then potentially resulted in this high volatility at the beginning of February 2018. But it's, over the years, I have to say, I didn't see this to add really value, because you see that volatility is low, and you probably say it's too low, and that's why I'm selling equities, because I expect volatility to pick up, which is usually resulting in a sharper decline. But then I saw plenty of times that it takes way longer that this idea might play out. And this is the classic, I call the classic John Maynard Keynes, where markets can stay longer irrational than you can stay solvent. And then that's why it's interesting to keep it in mind, to have it back in your head, let's say. And
yeah, I think this is a good indicator to say, okay, what has happened? You know, it's been quite volatile.
Yes, but the thing is, if such sentiment extremes build, I think then there can be some interesting ideas be built on, because if the market then starts to move and the VIX starts to move, and you see this squeeze develop, it could mean that I am willing to keep longer on a short trade. For example, I took, let's say, in the morning, and when there is a predefined take profit level, I have a plan, yes, but I allow myself to intervene in the trade then and to take out the take profit, because I think there's now a tendency that the market could accelerate from there. And I'm well paid if this really plays out, because then there's also a chance to get to see a flash crash, but this does not happen often enough so that I would say I actively look at the VIX. So,
yeah. And I think going back to actually the Canadian dollar and or even the US dollar, just from a currency perspective, because it actually, indices had been quite good on their relief rally up really over the past week or so. They've actually been a bit range based from a trading perspective. But there's actually been a decent amount of volatility in the currency market. I know, Markus, you were talking up some commodity currencies, I think just not a few weeks ago, right? With New Zealand dollar against basically New Zealand dollar complex, right?
Yeah.
What are you looking at right now in the currency market? We'll look at euro pound later on, because obviously we've got two people, 2 euros here and 2 Brits here. So we'll see which way euro pound, who's going to win that battle. So we'll go to that in a minute. But what are you looking at right now on the currency market, and how do you see that, Markus?
The point is, I'm a technical trader, and I only watched 2 things: the trend and the price. So actually, I have 3 long positions in euro, New Zealand and US dollar for long, and New Zealand and Swiss franc in long position, and British pound, Australian dollar in a short position, because it's trend, and I always work with the trend. And now New Zealand, US dollar, if you switch to New Zealand US dollar, for example, and then for 4-hourly chart, then you can see we have a wonderful trend, wonderful swing trades. And then after the last correction, we come out of this kind of correction on the right side of the chart. And then you can see up, we have a great possibility to continue the trend. And indeed, the fair price in 4-hourly chart regarding of the 1,440 candles or periods in the past, we have a fair price far enough away on the upper side. So I have a lot of space to go up to the next fair price. This is what I am looking for. And actually, I'm around at my entry at the moment. So we don't have too much liquidity in the market, because we have coronavirus situation in currencies as well. So you can see it in normally high liquidity currencies, we have less liquidity and very, very less movements at the moment. And this is a little bit difficult in currencies as well. So, and we see a lot of pressure in euro at the moment. And we have a really interesting situation, for example, in euro, in USD, Japanese yen. So what's happened there? Japanese yen is called the safe haven. So, and normally, if the markets are going up, the Japanese, in a normal case, must be going weaker, but you can see it doesn't work. So we have higher prices and we have a rising markets, and we have a damn strong Japanese yen. Why is it? This is a really interesting situation. So that's
because the US dollar is so weak.
Yes, of course, yes. But why is it? And I guess the smart money knows a little bit more than the normal traders. That's one of the points why I'm speculating on the short entry in S&P 500, but maybe not yet, maybe in the next days. So, and this is what I'm looking for. The same as we have a question about oil. Why is it not possible to buy oil now? Because we are on the bottom. So, and I see the same in oil. So I'm waiting for a trend that when the economies will come out from the coronavirus, from the lockdowns, they will need oil again. So, but it might be not yet, but I'm looking for a trend, because there's something what always is working in the chart. And this is a trend. Trend is always working. So, and that is what I am looking for. And yes, whatever, in gold, in silver, and that's the price. I always, because you see, we don't trade Euro Japanese yen, in my opinion. That's my private opinion. It's a question of perception. All four of us, we are looking on the right side of the chart, and everybody has a different perception of the chart. So if the price would be, if you would have the same perception, all of us would trade the same, but then we wouldn't have any kind of trading. So at the moment, I'm looking for the price, because you don't trade Euro Japanese yen, you trade the price of that point. So, and at the moment, I can see the price is really unfair, because the fair price of Euro Japanese yen, for example, is so much higher, around 117. And I'm looking for the next entry for going long in Euro Japanese yen, for example.
Okay, that's quite interesting. I know one of you guys commented just on the US dollar being quite weak, and I know, I mean, I've been looking at pound against the US dollar, which has been a bit of a range here. But I mean, Paul, what's your take on the currency market right now? Are you seeing opportunities anywhere in the British pounds? Maybe we've got the Brexit talks that have resumed, which haven't really resumed in the best way, as you can imagine. We had the German court ruling last week, which I'm sure Jens would have an opinion on in a moment, in terms of the ECB's actions. But Paul, let's start with you. Where are you in the sort of currency space right now?
I would disagree with Jens in the sense that I don't think the dollar is weak at the moment. I think the dollar just seems to be hanging around the 100 level, and I'd say it is strong, and it is stronger than most.
Okay. I'm sorry. I sorry, Paul. I think that was probably a misunderstanding. So I was just referring to dollar JPY, to this currency pair. So I know what you're talking about, because I disagree with Markus here on the euro.
He just wanted to say the opposite of Markus.
So and I know that the euro has a weight of something like 60% in the USD index future, right? So and I think the euro weakness is the main reason why the US dollar can stabilize there, and it's, I think, even a weaker sign for the euro that it can't profit from the, for me, weak US dollar in this case. So, but just
I think that my view is that the world needs a weaker dollar. Okay, but what the world wants and what it actually gets could be very different. If you look at the US dollar compared to emerging market currencies, it's been a bit of a bloodbath really over the last couple of months. You look at it against South African rand, Turkish lira, Brazilian, and the Mexican peso, etc. It's been a bloodbath. But at the moment, I think against the majors, I think the dollar. The dollar is kind of giving us all a little bit of a run around. Okay, we'll have a few days of strength, a few days of weakness, but it just seems to be rolling around that 100 level at the moment. We don't seem to have had any real conclusive kind of move or trend in terms of whether we're going to get continued dollar strength or continued dollar weakness. So I'm kind of waiting to see how that's, because that's what we have to. If you're going to trade FX, you need to understand what the dollar's going to be doing. With regards to having that, how that knocks onto pound again in terms of cable. Well, if you were to look at the monthly charts across most of the instruments, April was the month of the inside bar. It was after the kind of madness of February and March. April was just literally, we were just in small ranges, a little bit like what you showed there on pound against dollar. We just had small ranges. Yes, a few days of moves and shifts to one side or the other, but I still think not really any conclusive evidence of real direction. If I had to put my hat in it, I'd suggest that sterling is likely to weaken. Okay, sterling and euro are likely to weaken over the next few weeks as they move back towards those kind of Brexit talks, and about whether the Europeans get the extension or whether the British just continue to go with the exit dates that they were originally on. And I think that is going to have a huge impact on euro and sterling generally, but then of course also the euro sterling rate itself there.
And we did have that news, didn't we, with the German court ruling about the ECB's most recent quantitative easing actions. And we did see it from an intraday perspective anyway, at least. The euro did sell off quite a bit on that, actually. I think this what started off the huge move that we saw just in euro yen that Markus was looking at. I mean, if you look at euro against the US dollar, I mean, what's your take on this, Jens? I mean, I mean, look at this price action, right? I mean, there's just been so much craziness.
Yes, yeah. Well, let's first of all look probably at this German court ruling. I think this is a very, 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 very bad sign for the whole euro, not the whole eurozone, but the euro as a whole. I think this whole construct is doomed to fail. So I think this is a wake-up call for the European leaders now to wake up, the ECB to stand up and say, well, we have to really reformulate this concept. We have to find a way to get out of this mess, because what we're doing here is not working. And now it becomes clear that even the constitution from member states, in this case Germany, the biggest contributor to the euro, is not in line with what's currently happening. So it's sure that the ECB is selling it as special times, and we have to do this and that, and we have to somehow probably go a little beyond our mandate, even though no one is talking about that. And the as far as I know, the ECJ, or is it what's the name from the European? I'm sorry, the European. So
European Court of Justice, is that what you're saying?
Yes, exactly. So ECJ, right? Court of Justice. Yeah, ECJ. And they say, well, this is what we listen to, what they say us. But I think they misunderstood, or I think probably they didn't misunderstand this at all. It refers to the German Bundesbank, right? And the German Bundesbank plays a major part to some extent in the ECB itself. So which means that if the German Bundesbank is not allowed to participate in this ECB QE, especially, and I mean, this is something which probably most of market participants did not really well, I think most of them understood. It's about the PSPP, right? We are not talking about this PEP, this pandemic program, which was now brought on its way with 750 billion. And where everyone, by the way, was expecting that they extended by another 500 billion already last week on Thursday. So to make long thing short, I'm very skeptical about the euro, and I'm jealous about you guys in the UK right now. So if I had to choose between euro and pound sterling, I probably go for pound sterling. I think when this mess is over, I think that the pound sterling has way more potential, also to probably be attractive to outside investors as a how would we call this in Germany then? A third world country or something like that? Well, I'm not sure. So yeah, really, well, we refer to this and like that. So if I sent an invoice to the UK, for example, I have to say this is now a third-party country, somewhere like the Seychelles or Cayman Islands or something like that. And I think from a tax perspective, that could be really interesting and very attractive, especially with London. So as the financial, German, the word is Hochburg. What's the English word for this, Markus?
I don't know.
Yeah, this is like it's the most important place in the financial world, probably, or besides New York, then. Hotspot, yes. And I'm not sure whether this missing unity in Europe is not right now, especially based on the Europe, is not causing some heavier problems, especially after this pandemic is through, to regain economic momentum. I think, well, without unity within the European Union and without a euro, which is a product out of this unity, I think Europe has a very, very long way to go. And I think this is, yeah, this is a pity, especially with, and my personal take on the US dollar is very skeptical. So I'm not really sure whether the US dollar will play such a big role after this pandemic is through. So this is at least my opinion. And I think that the euro, if it's constructed in a healthy way, has a very good way to then play a very important role in a, let's call it a new world, probably, which has potentially a bigger influence from China, especially, which is working, as far as I know, already for now a decade or something on a crypto based currency. So I'm not really sure if this is, it should be a wake up call and not a point of discussion, and now start to reconstruct everything and try to find solutions how to, but just abandon this product and reformulate it in a constructive way, probably with the ECB to be the only central bank here, and not the national central banks to play any role at all anymore, probably.
Yeah, okay. So there's some interesting takeaways here that I just want to recap on. I mean, I've spoken to you guys for quite a few times over just like the past couple of weeks, and you know, calling for really just maybe a push back down actually in stock markets. They look like maybe this rally could around this, not exactly at this point, but certainly demand right now could be affected, and we could even see a retest. I know a lot of people are calling for that, a possible retest of these lows in equity markets at some point. Hard to pinpoint it because obviously there's so many diverging things with obviously the Fed pumping money into the economy, central banks, Trump, you know, he's not going to want the stock market to be down too much, right? When it comes election time in November. So some interesting takeaways there. I mean, with gold as well, you can't deny the uptrend that it's in right now. Probably looks a bit toppy where it is. So maybe it could be interesting at some levels. I know, Marcus, you've been looking at the likes of New Zealand dollar and some of the commodity currencies, which tend to do quite well actually when indices have pushed up. We've seen a bit of a rally in risk, haven't we, with indices and some of the commodity currencies like Australian dollar, like the New Zealand dollar. A bit of a mixed opinion here on some of the on the US dollar actually, and I guess obviously it comes down to it's not that clear in the short term and the long term. You know, you can probably pick out the potential trend, but right now there's just too many. Every country is just cutting rates, right? There's no one stronger current economy than the other. But I think that's going to be an interesting one.
Didn't Denmark hike?
At home to look at. In Denmark?
Didn't they hike? Or I think they hiked from something like minus 0.5, but I mean, okay, well, at least they hiked.
Still around, yeah, so still around zero, right?
But I'm not sure. Was it Denmark or Sweden or Norway? I'm not sure, but I think that some of these Scandinavian countries probably hiked those.
Yeah, they're set to I think they can do quite well actually after this lockdown period. But before we wrap up here in a couple of minutes, okay, and I just want to a quick, just a quick thing from you guys, just to how would you what's the biggest advice you can give to people right now trading in the markets? Okay, just in one sentence, if you can, Marcus and Jens. So I know you've got a lot of information there, but in one sentence, what's the best advice you can give to people in this current market condition? And we'll start with you, Marcus.
Trade the trend and the price.
Okay. Nice and short. Okay. And that's what it needs to be. So good stuff.
All the other things are part of human factor. That's all. Trade the price and the trend and work on your human factor. This is, you're on the right side of the chart. Nobody knows what will happen next. End of discussion.
Okay, very good. Jens? Have a plan and trade the plan. So I think having a strategy has saved you a lot of sleepless nights over the last month. So there was, by the way, a question which I saw how I traded during the crisis. I traded the same way as before. I mean, certainly I adopted my risk and money management plan, but I had a strategy or have strategies. I kept on trading them as far as the market allowed it due to the high volatility. And I performed stable. So really stable, still slightly positive, but stable. I was completely comfortable with that. I was not so comfortable in a private environment, but from a trading perspective, there was no headaches. And this was because of a plan. So have a plan and you're prepared. No question about that.
Great stuff. Good stuff. And certainly last but not least, but Paul?
Those are great comments by Markus and Jens. I'd be saying at the moment, don't force it. Okay, don't force it. Don't try to overpredict. Don't try to be a hero at the moment. Okay, I'd be saying let the market play its hand. All right, let the market show you the way, and then find a way to sort of trade with that new direction, whatever it be, whether it be bullish or bearish. It's just, we've seen the last few weeks. It's just, especially in those indexes, there's American indexes. There's been all sorts of kind of manipulation and volatility going on. Let the market play its hand, and then you find a way to jump on board and ride that.
Okay, fantastic. And I think my biggest advice to you guys out there is to listen to these three guys. So
that's great.
Let me I want to be the moderator next time.
We've got the easiest job, right? But no, you guys are in it every day. I'm in it every day, right? It's literally sage advice. You can't. You just got to know what you're doing, what your plan is. Turn up, rinse and repeat. Just stay calm, stay safe. Okay, don't get too caught up in all the headlines. Oh my God, this is crashing, that is crashing, and just do what you do every day. And again, really sage advice from all three of you. So, as always, it's always been a pleasure talking to you guys, and I can really see some really great comments. And apologies if we didn't answer all your questions during this session. There's actually quite a few coming through, but lots of great comments for you guys. So look, thank you everyone listening at home, okay? And thank you Markus, Jens and Paul for being here today. We wish all of you at home all the best, okay? Stay safe out there. And guys, yeah, thanks for being here today and sharing with everyone in this Traders Roundtable. And yeah, all the best with your trading and future plans.
See ya. Thank you. Bye-bye.
Guys.
See you guys.
Great to see you.
Thanks a lot.